You're listening to Carlow Connects, a local business podcast keeping us all connected. Available now on all major podcasting platforms. Welcome back to Carlow Connects. I'm Paddy Carl, and if you don't know the drill by now, and if you're new to this podcast, each week I meet with someone that's driving things forward in their business, and this episode's no different. So let's get cracking and let's jump in. Right. So today's guest is a man who spent well over a decade working in insurance, banking and financial services. He's a Limerick man that has ventured all the way up here to Carlow and has made Carlow his home. And after years of working for the big lads, he said he had enough of that crack, and in 2025 he set up Slaney Financial Solutions in County Carlow. He's got more letters after his name than most people having their full name: QFA, CIP, RPA, I hope I got that right. And while I won't pretend I can tell you what they all stand for off the top of my head, what they basically mean is this man has sought a lot of exams. So you won't have to think too hard about your pension or financial advice. Now, Shane built this business on three things: trust, transparency and personal service. Shane, massive welcome. And fair warning to our listeners, if you leave this episode without reviewing your pension, that's entirely on you, isn't it? Shane, how's things?
Good, Paddy. Thanks very much for having me.
It's great to have you in. Shane, are you mad? You were employed and you said, you know what it is, I'm going to start a business and I'm going to start it here in Carlow Town or in Rathvilly where you're living now. What was the moment?
Yeah, I suppose, look, it can be a bit of a mad decision to go out on your own. It's something I had always itching at me to work for myself at some stage. And I suppose, look, we have a little lad there, he's 5. And I said, if I don't do it now, I'm never going to do it. I'll leave it till he gets a bit closer to college age and then I'll bottle it. So I said, look, I'd go and do it. I suppose, look, really for me, I had worked for a number of large providers in the past in the market. And look, I learned a hell of a lot there and they were great to work for. But I suppose what I found was with the scale of companies of that size, it's very hard to give the personal service that I felt I would have wanted as a client. So I suppose I sat down and I said, look, if I was a client, what would I want to have? And it's as you listed there. It's trust, it's transparency, it's personal service. To be able to pick up the phone to someone and know exactly who we're going to be dealing with this year, next year, and in 5 years' time.
And do you feel that your client or that person that's out there looking for that, is that sense of personality, is it going? Is it gone? Are we too focused on the AI now? Is it harder to get people in your way of doing business in the financial sector? Yeah,
I suppose, look, there's something there for everyone in the market. Not everyone wants that approach, right? I suppose what I look at is finances from a holistic point of view. So someone comes to me and says, Shane, I want to do this amount into a pension or anything else. I say, look, I'm not for you. Really, what I'm looking at here is your whole finances. That God forbid you pass away in the morning or whatever happens, your estate can come to me and say, why did you do this and this? And I can outline the conversation we had and why we did the different things for you.
So what you're saying is that, like, as a financial advisor, you're not just going into one ad hoc area. You're trying to bring a whole package together for everyone. And I think there's probably a little bit of confusion. Oh, here he comes now with his pension.
Yeah.
You know, is that are people afraid of the financial advisor?
They are. Like, I had a fella say to me one day, he said, oh, you're the fella that sells pensions. And I said, I don't sell pensions. Pensions sell themselves. I'm only here to tell you about them. Mm. You know, like, when you break down individually the different benefits, for example, a pension gives you, people like all of it. They just don't like the name of it. You know, or similarly, people think they're going to be sold to. I'm not there to twist anyone's arm or to do anything. I'll tell you, look, here's what you need to have. Here's where you need to have it. And you either take the advice or you don't. Like I say, I'm a financial advisor in the meaning of the word. I'm there to advise you. You can take or leave the advice.
And does that obviously takes time though, doesn't it, Shane? Like when you really want to get down into someone, whether it's a business owner or someone has some sort of wealth or whatever, or they might have spare cash or whatever that they're trying to do something with it. Is it very hard for them to say, you know what, is this guy or this girl has my back here and are really going to look after me here?
Oh yeah, it does. And like it's not a one and done process, right? Generally speaking, the way I work is I'll meet with someone, we'll do what we call a fact-finding meeting. So I'll gather a bit of information from them, we'll have a chat like you and me are having here about what they want out of life, what they want to do, what they want to get to. And then I'll go in and I'll come up with a plan for them and say, look, meet them again. So here's what I'm recommending you need. Now, we don't need to do everything at one time. We might do it step by step. We'll say, here's your main priority, here's second, here's third. And we'll meet every year after that. Some lads want to meet every 6 months, and we'll review it as we go and chop and change it, you know. I'll often say to people, your finances are like a ladder. You know, you need to get to the top of it, but you don't need to go all the way at once. When we look at it, and I say to someone, you need to put €1,000 a month in your pension for argument's sake, right? That's not affordable, Shane. Grand. What can we afford? They said 200. We're better off putting 200 in than burying the head in the sand and doing nothing. 200 is at least getting you one step closer there. And that's my big concern for everyone, is getting them that bit closer to financial security. It's not getting all the way there on day one if that's not affordable. Because, look, at the end of the day, people need to live for today as well as planning for tomorrow.
And is there a type of person who actually is harder to convince? Like, is there a person that thinks they're too young? Is there a person who thinks it's too late? Like you're obviously meeting so many different types of people.
Oh, yeah. Yeah, like there is. And the big one I often come across is, I don't need life insurance or illness cover. I'm fit and healthy. So that's the time you take it. It's like trying to buy car insurance after you crash the car. You know, the younger you are, the healthier you are, the cheaper it is to take it out. And I'll often put it to people, it's like your Sky bill. You take it, you forget about it, and if you need it, it's there. You hope you never need it, but it's there for you. Like, I often look, a lot of people focus in my area on pensions and investments and the big ticket stuff, as we call it. But I would say to people, the first port of call for 90% of people listening to this podcast be protection. And I often look at it, there's an old colleague of mine used to put it that if you had an ATM in your house and every Friday gave you €700 without fail, would you insure that ATM if something happened in case it broke or it stopped working? I said, geez, of course I would, Shane. Yeah. I said, that's what you are to your household. You know, you're a money-making machine. And if that money-making machine stops and you've no insurance to get it going again, it's tough luck.
And are people, and I'm always intrigued about the mindset of people, right? And I understand, do some people look at as the protection as another expense? So say, for instance, if it's, I don't know, if it's 30 or 50 euro a month, right? And the first thing to do is to multiply by 12. And they go, hold on here now, that's 700 or 800 euro a year that I don't have, or I think it's a waste of money. But it's not really a waste of money, is it?
Look, well, I'll put it this way. You'd hope it's a waste of money. It's the kind of thing you want to buy and hopefully never use. Right? You know, at the end of the day, if everyone took protection on me, never used it, I'd say, that's fantastic, lads. Well done. Because, like, no one wants to say, just that was a great policy. When he paid it for 2 months and he died, and you're quite lucky. You know, like, I look at it, like, I'm a big believer in it, right? And I'll tell you, from my own side of things, right, that I'm protection coming out my ears. Because I sit looking at it every day and I see the cases coming in different bits and pieces. But, like, my wife was diagnosed with MS. Touch wood, she's okay, but she's out of work with it.
Okay.
And she will probably never go back to work, right? But we had income protection in place, which means her salary is protected to a certain extent. And that allowed me to go out and set up my own business. If we didn't have that in place and I was the only income earner in the house, as you said to me, are you mad setting up by yourself? I definitely would have been mad. So dropping all income to take a chance on it. Now, it was still a big risk to go set up myself, but knowing there was a safety net of her income still coming in because of the income protection, it's huge. And I find like that, it's only after you see the benefit of it that you really see how worthwhile it is. And unfortunately for most people it's too late because something happens. I'll often get lads ringing me up and say, Shane, do I have any illness cover in that policy of mine? I said, yeah, you do or you don't. I said, if you don't, were you just in a doctor? Yeah, I was, yeah. Okay. Grand. Look, and sometimes they can look at it and sometimes it's too late.
Yeah, that's interesting. And has anyone ever said thanked you in years later for nagging them into sorting out their protection or their pension?
I haven't had it myself. I had colleagues like that who've come along with the protection side, right? That have had claims. But like that, what I've often found is people forget what they have. Right? So I had a financial review with a guy about 5 years ago and came in looking at his pension. And we were chatting away and I said, I haven't seen you in a while. I said, oh yeah, I had a bout of cancer there. Oh, now we'll have a look here. I said, you know you've got illness cover for that. Do I? I said, yeah, you have. Filled in a claim form, sent it in. I think off the top of my head it was 40 or 50,000 he got from his policy that he didn't know he had. He forgot about it. Because like that, you buy it, you set it, you forget it, and you hope you never need it. And like that I say, the best thing in the world is that policy is a waste of money. But if it's not, and you need it, you're damn glad you have it.
Shane, is there so much confusion out there regarding financial packages? Like, there's just so many of them, and like, if you're not in the game, like, a lot of it can just go over your head. Is it just that there's too much, or is it because in the name of these things and it's a policy after policy?
I don't know if it's too much, but I think what it is, it's people with hodgepodge bits and pieces. So, you know, they've taken a bit of mortgage protection when they bought their house, and they took what the bank took the mortgage with, which most people do, right? And then they might have a bit of a pension through an old employer, and that's at the side. And they might have a new pension through a new employer, and they might be in this new government scheme, and you know, and they have all bits and pieces, but they've no one dealing with it all holistically. I think that's where the value of a financial advisor comes in. So let's see everything you have.
Okay.
Let's make a plan of what you have. And like that I said, the mortgage protection is the classic one. You know, people say, "Oh, I've loads of life insurance. I took mortgage protection when I bought the house." Grand, no problem. If you die, the mortgage is covered. Yeah, great. Are the family going to keep eating? Are they going to keep getting electricity? Are they going to keep putting diesel in the car? Well, yes, they are, yeah. Grand. Can they do that without your wage? Yes, they can. Great.
Great.
And there's a lot of people like that who mortgage protection is enough for them, right? Because there's state benefits and there's various bits and pieces that are open in there. But just knowing that you're okay. Like, I'll often ask people in the meeting, I'll say to them, look, do you know what will happen to your family financially if you die in the morning? No. If I ask you the same question next week, would you like to be able to answer yes to that? Yeah.
And are people asking those questions now, Shane? Is it it's not a taboo topic anymore? Are people?
I suppose. Look, you have to. It's something I was trained on when I started in the industry. Is asking the awkward questions. You're nearly like Joe Duffy at times. You know. Yeah. How bad would it be if you died? Yeah. But it is getting that awkward conversation. People don't like having those conversations. It's not a nice conversation. No. What's going to happen if you or your partner passes away? Or what's going to happen when you retire? And all Irish people seem to have a mindset of, to be grand. It'll be grand, it'll work out.
So it'll be grand, yeah.
It'll be grand. That's their financial plan for a lot of people. It'll be grand.
I won't worry about it today.
Yeah. And like, look, I understand for a lot of people, there's financial pressures there. And there's things they need paying for today. Paying for the protection, or paying for saving for the future, or paying for their pension. It's an extra bill they can do without. But it's taking that little step towards it, or even just knowing where you are. You know, making a financial plan and saying, right, here's where I need to get to. And if, for example, you need to be putting €100 a month into protection to cover all the bells and whistles, I can't do it today. But if it's 20 or €30, and it gets me some way closer, that the family are some way better off if something happens to me.
So what you're saying, Shane, is that it doesn't have to be big lumps, big lump sums or big money every month. No. It can be very little.
Yeah.
As in little that you can afford and still get by, you know, week to week or month to month.
That's it. And it mightn't get you all the way there, but it'll get you closer. You know, same with like planning for your retirement. You know, if you can afford €100 a month, it's not going to get you a large pension pot. But it's much easier to tweak that in a year's time to 110, 120 and adding bits and pieces. Because once you're used to spending that 100, the 100 is gone. You're only trying to find another 10 or another 20 and adding it up and up along. And what I find especially is when people get pay rises, I have a lot of guys who are very shrewd that they'll go, right, half the pay rise I'm going to put into it. I'm not used to having that extra money. I'm still getting extra take-home pay, but I'm putting an extra chunk into my pension there as well. And like that pension as a word sometimes just makes people recoil and go, like, even when I'm listening to the radio in the car, when I hear pensions, I change the station. Pensions
has it a reputation of being the most boring topic in the world right up to, with watching paint, right?
Yeah, 100%. Like, you know what I mean? It is. But what's not boring is being able to live your life in retirement. You know what I mean? Like, the state pension, like, we're very lucky in Ireland. I know we all give out. But in Ireland, the state pension is actually quite generous compared to a lot of other countries. But it's there for subsistence living. You know, it'll keep you alive, but not a whole pile more. You know, and like, I'll have a lot of guys that are in with me looking to do retirement planning. Most of them aren't looking to build €1 million pot, but they want to know, look, that I can put oil in the tank and that I can have the odd holiday and that I can go out for a bit to eat or go for a couple of pints when I'm retired.
So they're going, right, I'm whatever I am now, I'm in my early 50s or whatever, and I'm going, look, the the age of retirement in Ireland. I just seen it today that I think they're putting into law that you can keep working now or something on. But, today is what, 66, 67?
66, yeah.
66. So what they're looking at now is if I retire today at 66, that I'm just able to get by.
Yeah.
I don't want big lavish stuff. I just want to be able to pay me bills.
Yeah.
Put food on the table. A couple of holidays if I can.
Yeah.
But enjoy the last whatever.
And like what I'll often find with a lot of people, like 65, 66 isn't what it was 20 years ago. You know what I mean? Like it's not like there's a long way to go for a lot of people at that age, right? So you do want to enjoy it. What I'll often find is when a lot of people retire, their outgoings actually go up slightly at the start because they always said, I wanted to see Australia, I wanted to do this, I wanted to do that, and they can do it. But then they settle back into their normal lifestyle of things. They're going, right, I'm not going out to eat. I'm just going out, I want to go for a couple of pints on a Friday night. Or I want to go for a bit to eat on a Sunday. And you want to be able to afford to do that, right? And really, that's what financial planning is all about. It's allowing you live the lifestyle you want to live and protect the lifestyle you've built, is the long and short of it.
And is just financial planning, is the marketing around it wrong then? Is it not worded right? Is it, is it, oh, you need to do this or you need to, but is there a different way? Like how do you actually make people care and about something they'd rather not think about?
Yeah, and it's those scenario questions. Back I said the Joe Duffy scenario. It's actually making them have the conversation. It's because if I'm doing a review with you, for example, Paddy, I gather all the information from your incomings, your outgoings, your assets, your liabilities, right? So it makes it the numbers are yours then. You're the one giving me this. It's not me telling you what's costing you to live. You're saying, this is the bills I have, right? So for example, I have a young family and I'm doing a review with them. And I'll often see this case where they go, oh, we have €200 a month and we want to put it into a savings account to make a few quid more. Grand, brilliant, lucky enough to have the extra money there. I'll do a review with them. So you don't have any protection in place here, right? So the savings are great, right? Because people don't see that as a bill because they're building the money they can get it, right? But say, God forbid, say you're doing 200 a month. God forbid you pass away 2 years in. You've got a little under $5,000 there. How far is that going to go for the family, right? Let's look at it another way. Why don't we put €50 a month of that into protecting the family and save $150 instead, right? So you're not spending any more money, right? No, sure, like that. We'll be grand. So, okay, right. You pass away in the morning. Mortgage is clear. It's a bit of state benefit there. Are we going to drop the kids' dancing lessons? Oh, no, we couldn't do that. Right. Are we going to start walking to work instead of driving? No. Is the food shopping bill going down massively because one less you there? No, it's probably not. All right. So how is the family going to live? And it's an awkward conversation, but you need to get, I suppose, comfortable being uncomfortable. And it's that uncomfortable silence with people.
But are we, Shane, another thing is, and it's come up of late, and obviously, we're some savers here in Ireland.
Massive.
And that's saving in current accounts and deposit accounts that are actually, it's not doing anything though, is it?
No, it's not. And like there is a new government scheme proposed, but you know yourself with these, it could take a long time. There are options there for that money. And when I'm talking to people about options for their money, I'll always mention the word risk. And most people sit back in a chair and say, Shane, I don't want any risk. Fair enough. But when you leave money sitting in a current account, the risk is that it's not beating inflation. That's a guaranteed risk. It's not. So what your €1,000 will buy you now, it'll buy you less in a year's time, in 5 years' time, in 10 years' time. And that's a risk that's guaranteed. Or we can put it into something and try and get a bit of a return for you. Now, we'll take a level of risk that you're comfortable with, right? Because everyone has a different comfort level. I had someone ask me one day, Shane, if it was your money, what would you do with it? So, you don't want to know what I'd do with my money. About 5 years ago, a friend of mine rang me. He was up at a horse sale going to buy a race horse here. Do you want in? I said, yeah, geez, let me in. Yeah. And we bought it, and I told my wife when I got home.
How was that conversation?
Well, I said the risk of buying it wasn't as much of the risk of telling my wife, right? I put it that way, right? But like that, we had it away in train, and it was great. It was going to be great crack and the whole lot. And we sent it out in a race one day, just give it a run out, and broke his leg a mile in. First race. So like, but that's not an investment, that's a gamble.
Yes.
Right? But as I say, it's about you being, that was a level of risk I was comfortable with money I was comfortable to lose.
Yes.
You know, like what I'm doing with my young lad's children's allowance, for example, that goes away into a regular premium investment for him, and that'll build up there for college. Or if he wants to do a trade, or everyone wants to do, there's money there, and he can use it for what he wants down the line. Now, I know I'm in a lucky enough position that I don't need to spend that children's allowance. There are people listening to go, geez, I'd love to be able to save the children's allowance. But it's everyone's in a different situation, and that's why everyone's financial plan is specific to them, right? And when we say about money sitting in accounts and not making money, I often think about, I met a fella, he was a bachelor farmer, I'd say it's 10 years ago. And he had $250,000 sitting in a deposit account, making nothing. And he came in to me there, his accountant recommended he come in, he had a chat with me. He said, look, what's the plan for the money? I said, it's there to buy a bit of land in case the land come up. I said, great, perfect, yeah, ideal to have it there. How long is the money there? It was originally about £200,000. And he says, probably there about 20 years more.
Right.
And I said, right. I said, tell me this. I said, when you put that money away, how much land would £200,000 buy you? Oh, geez, it'd buy you a good farm in Carlow at that stage. Grand. What would €250,000 buy you now? I said, sure, it might buy you 12 or 15 acres. I said, grand. I said, on paper, you've lost nothing. But in reality, you've lost the farm.
Yes.
And it's only when you put it in stark contrast like that, people don't see the risk. It's money on a page, and that's not no risk at all. But it's a guaranteed risk. It's not going to buy you more in the future.
Because inflation is moving so... It's up and it's down. And while it's sitting there, you know, your money is devaluing all the time. Unless you're willing to maybe take that risk and put it into something that is actually counteracting inflation.
But you don't need to take any great levels of risk. Like when I say risk, people assume high risk. Risk in everything. We can go quite low risk with things. But what I recommend most people do when I sit down in financial reviews, they have money there, right? So in their own mind, they break it out into 3 pots. So pot 1 is money, right? That's money I want to have on hand at all times should an emergency come up. And I need to have that at all times. And like that, the bank, the credit union, the post office, that's the place for that money. Pot 2 is money you say, right, I don't need it right now, but I do have a short to medium term plan sometime in the next 3 or 4 years where I'm doing work on the house with it, or we're changing the car, or one of the kids is starting college, or we're going on a large trip, right? And again, the bank is the place for that. Maybe put it in a deposit account to get a little bit of return. You're not going to beat inflation, but put it into something like that, or a state savings scheme, depending on the term, right? But pot 3, that's your longer term money. It's your rainy day fund. You have no plan for it. It's not needed for emergencies. It's not needed for short or medium term planning. And that's the money you want to get working for you.
Okay.
You know, like it's not about putting all eggs in one basket, but people do it. As you say, people have large deposits sitting there. And when you actually drill down, that's there for an emergency, right? But how much of it's there for an emergency? How much of it's there for plans? Is there some of it you could have working for you? You know, and getting some bit of return on some of the money. And even if it's not going to beat inflation, then it's getting you closer. As I say, it's just getting you that step closer to where you want to be.
And the younger generation coming up now, you know, getting their jobs in their early 20s or even earlier in apprenticeships, are you starting to see a change in their attitude towards their money, or is it, no, Paddy, go back 20, 30 years, it's still the same, or is there a change?
There's definitely a change, and it's nearly an enforced change on them.
Okay.
Because like that, rent is a lot higher now, mortgage higher. People aren't thinking beyond their house. And in some sense, you can't blame them.
Yeah.
Because the affordability isn't there, right? But I suppose what I'm finding is everyone is using the same excuse, whether it fits them or not. And for some people, it's not an excuse. It's genuinely a fact of life, right? They're saving for a mortgage, or or they're paying rent, or they're saving for a wedding, or whatever it is. But you see some people talking about the financial crisis, and that you know what I mean, that there's a cost of living crisis, and there is. But some people aren't as affected as that by others, and they could be doing other things with their money and getting it working for them. You know.
You spent years working for some of the big institutions before going out on your own. Was there a moment, a specific, right, that's it, moment where you thought, I can do this myself and I'm going to do it better myself?
Yeah, I suppose, look, it wasn't a that's it moment. It was a building and thinking of it every year, and I'll do it, I won't, I'll do it, I won't. And then I eventually said, right, I put a few pound away. I said, I can afford to pay myself for a period of time here. I can afford to set the business up, and I'll take the chance. And like that, buying the racehorse It's the gamble on it. It's a more educated gamble, I'll tell you that, right? But like that, it's going right. At some stage, you have to take the chance if you're going to do it. And it's never, like anyone setting up their own business, it's never guaranteed to make it. But if you put enough research into, my big research was why? Why am I doing it? As you say, what can I do better? Or what can I do differently, right? But it's also having a real strong look at myself and saying, right, what am I good at? What am I not good at? Right? Or where I need help. So what I did when I set up was I took on a compliance consultant who handles all my central bank compliance. I have a strategic consultant who I meet with quarterly, right? And I suppose what he does, he sits there like a member of my board. Because I'm a lot of the time managing my business on a day-to-day. And sitting down with him for a couple of hours every quarter, it's kind of right, have another look at the big picture. How does this get us closer to the big picture?
View.
Yes. As to what we want to get to for it, right? I've engaged marketing professionals in areas like that. What I'm good at is financial planning and dealing with people on a one-to-one basis or dealing with a room of people. So having that expertise to deal with those niche areas, I find it really it took a lot of the risk out for me. Because I go, right, these are going to deal with that area. What I'm doing now is very similar to what I've always done. The difference is I'm able to do it in the way I want to do it exactly. Now, I've definitely been coloured by the companies I've worked for. I've taken some great insights from them. I haven't gone and reinvented the wheel or anything like that. But I can do exactly how I want to do it. I can work with the clients I want to work with. And then I can leave a lot of that area to others to manage for me. And then I just come in at the very end stage of it.
And for someone that came to Carlow when they were very young, for to have the opportunity to open up your own business within your own county that you live and work and family and friends, how important is that, the local connect to the place?
It's great, like, you know what I mean? It allows me to do things and support causes that I want to support. Even little things like the GA club wants a bit of sponsorship or something. You don't have to go asking someone else.
We won't mention Raphael and Palatine here now, Shane.
Well, you know what? I gave a bit of sponsorship to a couple of them. But Palatine wasn't one of them.
Thanks, Shane. You're in the black book now. And do you feel that you're a small local operation going up against, there's some household names in the financial game with massive marketing budgets, and when someone Googles financial services or financial advice and your name comes up against, a bank or someone that's been around since 1783, what's your pitch? Why Shane? Why you?
Yeah, and look, I suppose there's positives and negatives of both of those, right? They have the scale and the size and all that, but they don't have the personal service. They're not the fella you're going to see walking down Tullow Street. If it hits the fan and you want someone to give out to, you know where you'll find me. There's that. But I suppose, look, I'm not going out there trying to be all things to all people, right? So I still work with the large providers. I use their fund management side. So if you're putting money, for example, into an investment or a pension with Slaney Financial Solutions, it's not me deciding the various shares and the various bonds that are being bought. We're still using the likes of your Irish Lifes or your Royal Londons or your Avivas, your Zurichs, your Standard Lives. We're going to the market and we're doing a research report as to where suits you best. So your level of risk, the benefits you want as part of it. So you're just getting access to the whole market, and you're using a small, trusted local provider to do it.
And I think, Shane, that's where a little bit of the confusion is probably with financial advice. People, your services that you're helping them, I don't know if this is disrespectful or not. Are you the kind of the middle person that's going into all these institutions to look at all their different things, and you're helping that person to decide which package is best for you, because there is so many.
Yeah, that's it. Yeah. That's it exactly. Like I'm part of an overall bigger service, right? So a lot of the work that I'll do is I'll get people. Their accountant might refer them to me. So their accountant, I find accountants are great for broad range of knowledge, and they do like I've done in my own business. They siphon out what they need to. So their accountant might tell them, Paddy, you need to do X a month into a pension. And go and talk to this fella here or this fella here, and then come to me. My step on the scale is then, right, let's have a look at your overall finances, let's have a look at your attitude to risk, and I'll say, right, do a report and say, here's where I'd recommend you go with that. And then the further step on the stage is if we put you, for example, at Zurich or Irish Life, that their fund management is right in a risk-weighted fund, for argument's sake, here's the assets we're going to have in it. So everyone is responsible for their own bit along the scale.
Is there anything that you could recommend to people, whether they're in business or just an employee? Is there anything that they should look out for when they're going to someone like yourself, financial advisor? Like how do they know, geez, am I sure here now? Do you know, like say for instance, some people may have the perception that the accountant does all this stuff. Do you know?
I say, look, have a look for someone being quite pushy, like anything, right? I'm not a salesman. There's some people in the industry that are definitely salespeople, right? And being a salesperson isn't a bad thing, but you're not advising if you're selling, you know? So I'd say have a look for that. I'm there to give you the advice. If you take the advice, great. And look, that's how I get paid, is you taking the advice at the end of the day, a commercial enterprise. But I'm not there to twist anyone's arm into doing it. You know, like, I generally don't do any business in the first meeting I meet someone. Like, if you come into me, now, the only exception is that someone rushes in their accountant and it's tax deadline day. And they go,
tomorrow.
I had a fella ring me one year at 4 o'clock on the 31st of October. I need to put money in a pension by close of business today. Look, we can get it done for you. It's not going to be pretty. You know, you're not getting all the bells and whistles in the report. We'll do something and we'll sit down again next week and we'll tidy it up, you know. Okay. But that's not the way to operate it, you know.
So timing is a big thing, isn't it?
Yeah, it is, like, you know. Timing is all important for it. It's taking the time. It's a big financial decision, right? From a business owner point of view, what I find is a lot of business owners put everything into their business. And their business is their baby, right? And rightly so, but when we look at risk, it's all eggs in one basket, right? Where retirement planning comes into it, number one, it's moving money from the business's pocket to your pocket in a tax efficient manner, right? Number two, it's diversifying your level of risk. So it's not all in your business. Now there's some money in something else, doing something else for you that you're not having to work to make it work. There's someone else dealing with it, right? And number three, it allows you to step away from the business at some stage. If you have a family member coming up along behind you and they want to take it over, the retirement plan is there to pay you, the business can pay them. Or if you decide, I'm going to work at it till I die in my boots, you're going to do less in your 70s and 80s than you will in your 40s. So it gives you that choice.
To me, though, there's a science behind this, though, isn't there? Like, you're talking interest rates, you're talking this, that, and the other. And sometimes when you receive a report, you're kind of going, oh my God, I'm bamboozled here. I think the messaging and how it's cleared and like the likes of yourselves can break that down for people and for businesses.
No, and that's it. Like, it's like everyone has access to the internet and the other few things, but you can have all the information in the world, as you say. It's trying to break it down to suit you. You know, you can put into Claude or ChatGPT, where is the best management charge for a pension? And it might be right, it might be wrong, but it'll give you some information, right? And like AI is getting better, but it can't give you that personal touch. It can't chat with you and you tell the story of here's what I want to do in retirement and here's what I want to do, you know, and go, right, let's make a plan personalised to you.
So that management charge, that percentage might be, it might be low, but what are you getting for that management charge is a major, because if you take out something, whatever it is, protection or a pension or whatever, and you hear nothing from no one for 2 years. Well, is that management?
No, and that's it. Like, you know, it's trying to get, like, as I say, financial advice isn't a one and done process. You want to be getting ongoing advice, and even if it's just a once a year phone call, you know, some people, everyone's expectation is different, right? But where it really matters is when you get to the crucial stages. Even someone taking a protection policy, right? You take a protection policy when you buy your house. And even you take an extra bit to cover family, right? But you never review it. Your salary has probably increased over time. You may have had children. You know, your circumstances have changed dramatically. Shouldn't your plan change as well? And that's the same with anything in it. And I suppose that's where the planning piece comes in. in financial planning. A lot of people did take a step back from financial planning after the crash. And a lot of us were tarred with the one brush. Now, I can't be blamed. I was in college at the time, so.
But do you think that's what did happen?
Oh yeah, there was definitely an element of that. But as well as that, there was the ghost stories of it. Like, there was certainly people very badly hit, and like I see, where we've seen it a lot, right, was in your industry, construction industry. You'd have guys set up pensions in their 30s, went in quite high risk. They were never looked at again. They were in their 60s, the crash hit. Their pension maybe halved. And they had to draw it because there was no work out there and they had to pay the bills. So they had to suck up and take the half pot. Now, if they were younger and they left it there, it came back up along. But if you don't have the time, but that's where the big financial planning piece comes in, is they shouldn't have still been at that level of risk at that age if they were being given regular advice.
But with the geopolitical things that are happening around the world at the moment now, Shane, do you see it? Like, if you take out a pension today or whatever, like, there's no point looking at it every day.
No.
Because it will never grow.
You'll drive yourself mad, right? Like, I did a large pension pot for a fella a few years ago, and he rang me the day after and said, "Gee, Shane, that's great, it's up 1%, that's fantastic." And I said, "Stop looking at it, it could be down 1% tomorrow." I said, "Have a look at it maybe for 6 months, and just get an idea." Or some people do like to look at it when so like a big geopolitical event happens, right? They like to look at it and see how it's impacted. But at the end of the day, all you do is driving yourself mad, because like it's like closing the stable door after the horse is bolted. You know what I mean? There's no point then trying to wind it back, But it's as you went back to timing, right? It's a long-term thing. There's an old saying in financial planning, and it's a bit cheesy, but it works. It's that time in the market beats timing the market. Okay. There's no one rings a bell at the bottom, there's no one rings a bell at the top to let you know that's where it is, right? But by you being consistent with your financial planning and just buying in through the highs, buying in through the lows, you'll weather the storm.
And that's in your remit, isn't it? To advise your client.
Yeah.
To say, hold on here, I'm looking to invest in this, or I'm thinking of this, and it's up to like yourself. Either now is a good time, or do you know what it is? We might just wait on this, or we might just look at the risk profile for the minute.
Yeah. No, and like that, I'll always tell people, look, at some stage in this, a dip is going to come. You're going to ring me, and I'm going to tell you do nothing, right? And like that, when the war with Russia-Ukraine kicked off, right, a client rang me and said, "Shane, I'm taking a big dip. What should I do?" I said, "What did I tell you to start?" He said, "You told me you were going to tell me to leave it, but I just want to hear you say it." And I said, "Leave it. Grand, that's what I'll do." Because like that, it's about not getting too excited when things are going really well. Like, as I said at the start, pensions are boring. And you want your pension to be boring. No one wants a really exciting pension. Because it's flying up and down like a roller coaster, right? There's certain things in life you want to be exciting, and your pension isn't one.
You're making it sound so good, Shane, these pensions. You built a business in Carlow from scratch in 2025. No giant brand behind you, no national ad campaign. How much of your early growth came just down to knowing people and people trusting in you? So I'll just bring it back to the Carlow Connects. Was there any entity in Carlow that you said, I'm going to reach out here or get involved?
Yeah, it's all down to that. Like I said, that's my brand, is personalised financial advice. So it was like through the Chamber of Commerce, for example, I reached out to a few local accountants and gave them, like I'm giving you here, here's what I do, and if that's of interest to you and your clients. And I've been lucky enough, I've had accountants refer business to me. Like, I find accountants look after their clients like their family, right? They treat the money near like it's their money, right? And I often say, look, if you want to sit down in the meeting, by all means, sit in, right? But that connection there was great, because like that, people trust their accountant as well. So if their accountant's telling them to come to see Shane Kenneally, that's worth its weight in gold. It's worth more than any national ad campaign of, this is who I am and give me a shout. How many ads do we see in a day, But like that, going to networking events, like you mentioned the one UPMC, for example, being able to get to meet local people and chat to them, put a face to the name, is the big thing.
It's key, isn't it?
It is. It's huge. And like that's, like, it doesn't work for every business, but for customer-focused businesses, it's key. People want to know who they're dealing with.
Yeah, and I find that even though I'm in the construction industry and you're in the financial industry, when you get talking to people at these events, there's always some sort of an alignment somewhere, no matter what they're doing.
Yeah.
You know, obviously we do podcasts in here, and when we're chatting, we're talking about podcasts, we're talking about finances, we're talking about construction, and then someone knows someone that might need a help with something. And I think the meet and the greet and the cup of tea, and sometimes, you know, it can be daunting walking into a room when you might know anyone.
Yes.
But sometimes when you do your homework to say, right, I know this certain person is going to be in this room,
Yeah.
I'm going to make a beeline.
Yeah. Oh, exactly. Yeah. But excuse me, but like that, we're all dealing with different people, and can help each other out in our business. It mightn't necessarily be a direct, but it's that connection. It's you knowing someone that I know, and Ireland is a very small place. You know, we can all link back to, oh, I know such and such, Paddy knows, and you just have and it's not all about making business connections. Sometimes it's just about making personal connections, because working for yourself can be a lonely place at times, and getting to those events can even help with that. You know, getting you out of the office, getting chatting to people, and just sometimes even talking about their business rather than your business.
Yeah, but you're like for like the, you know, there's the good times, but there's also the hard times where you know you might need advice from someone that's in a field, and you might get to meet them at these networking events.
Absolutely, and even just getting recommendations for like that. I'm looking to get signs, man. I see you did that. Who did you go to for that? You know what I mean? I'm looking to get business cards. Who did you use there? Like,
isn't it mad how that operates? Isn't it?
Yeah, it is. Like, you know, and like a personal recommendation is worth 10 times what you can Google.
And I always notice when you're meeting like-minded people like yourselves, they're so eager to help you.
Yeah.
Oh no, that person gave me this, and just I'd love to. And actually, will you just tell them that I gave them your number or whatever like that? Do you know what I mean?
But even in the financial services end, there's a lot of financial services providers in Carlow. I've met a couple of them that I knew, a couple that I met through that, and even though you're competing against each other to an extent, very willing to help out, and you know what I mean, and chat through bits and pieces. Or look, give this fella a shout here; he's quite good for that. Because at the end of the day, there's enough business there for everyone. You know, it's a lonely world if you see everyone as a competitor.
You're on the board of directors with Carlow Chamber. Was there a specific mindset with that, or was it giving something back, or just to see, you know, for such a small county, we've a big business?
Yeah, a former CEO had asked me to become a director, just coming from the finance background, just trying to, I suppose, broaden the scope of who we had on the board. And like that, I've really enjoyed my time on it. Like it's not that much time given up to it. And you do learn a lot about the intricacies of Carlow businesses, and there's a huge amount I've learned about businesses you drive by every day.
So many industries in Carlow.
Huge
Unbelievable.
amount, huge. And so many global businesses in Carlow that you would never see.
Unbelievable. And I suppose when we're in the rooms with these people and we're going to events around the county, it's amazing just to meet some of these people, and just, you know, they're giving you their time to say, no, I'd have a look at that, and I do this or whatever it is. And I think that's important though, isn't it?
It is. And even like that, we go to events and you hear the story of a lot of them as startups. That was a lot. Like I was working for other companies while I was a part of the chamber, and you're hearing, and most of it, a similar story. I worked, I enjoyed it, I knew I was good at this, and I wanted to build it for myself. And across all industries, that's where most of them have come into it. There's some there that have taken over family businesses, and even in that, it's a different challenge because it's trying to build on the legacy and make it their own. So it's great to hear the stories of other businesses. Well, look, it's the kind of thing, if it worked for them, it can work for me.
Do you think there's something specific about a county like Carlow, like the size of it, the community feel that actually works in your favour, Shane? Like, do you go, do you know what it is? It's a small county. We actually, right, we kind of all know each other.
Yeah, 100%. Like, you know, like you can travel the length of Carlow in about 40 minutes. You know, it's not a big county at all. But it does have that local feel. It means that, especially for the service businesses in Carlow, you can go to any of them. You know, you can get a recommendation for a cafe in Boris or Hackettstown, and anyone in the county, I'll try that for Sunday lunch. Whereas if you're coming from a large county like Cork, You could be 2.5 hours across the county. You're not going to go, I'll go from East Cork to West Cork to try this cafe because they have a nice breakfast. You know,
No,
so
100%.
there is a bit of that, the bit of small and local, and everyone knowing each other. It can be great for that because everyone has some bit of a connection to someone else.
Finally, if you could sit with every 25-year-old in Ireland down for 5 minutes and say one thing about pensions, what would it be? And you're not allowed to say a start now, because that's what everyone says, right? What would you say to them?
Yeah, so I suppose, look, it's about making a long-term plan. Right? It says start with the end in mind, right? So, what does retirement look like for you? And that question is going to change. The answer to that's going to change as their life goes along. But what does retirement look like to you? Is a question I'd ask everyone.
And that's hard to say to a 25
It is.
or to a young person.
It is,
yeah.
of course. But to go, geez, I don't know. I'd like to be able to do a bit of travelling. Grand. Would you do it on 200 quid a week? Oh, no. Grand. You need to do something about that. I can show them all the options. Like, I was lucky enough, I did start my own pension at 21 when I started work. Started at 50 quid a month. But it was getting the habit of doing it, you know. But I would say that, I would say to everyone, start with the end in mind. What does retirement look like to you? Because it puts it in focus of what you want to do. And I think looking at the figures as well, like when you look at the time in the market and the compounding of it, you know, like you've put €100 away, and if it's growing at 5% a year, it's worth 105 and on, you know, and what that's worth.
And Shane, is there a bare minimum that someone should be putting in? Is there any figure there that?
No, it's very personal to everyone,
Is
to
it?
be honest with you, right? But really, it's what you can comfortably afford is the figure. You know what I mean? It's about you having something there and being able to add to it. That's at the end of the day what it's about, you know, because there's no point in saying, just I can't do that, I'll do none of it. I say it's getting yourself that bit closer. But for the majority of people, what I would say is protection should be the number one goal.
Number one.
At the start, right? Now, barring like that, you're a 25-year-old with no one financially dependent on you, right? But when I met a young couple the other day, Paddy, and they were in their early 30s. They weren't married, they were engaged, and they were renting, right? So actually, we've no real need for. I said, right, are you planning to buy a house together? Oh yeah, we are at some stage. Great. If one of you dies, the other one going to be able to buy the house.
I know we're very morbid here, aren't we?
Very morbid, yeah.
Yeah, but you
And
have
like,
to be looking at these
look,
things. Though.
Debt and taxes are the two things we can't avoid, but there are two things that can help make it a bit easier.
Yeah, revenue. And what about the? I know we said about the 25-year-old or 20-year-old. You know, what about the 45-year-old who's just realised they're behind? Like, is it panic stations, or is there still a decent path forward?
Actually, there is. Like, they're going to work another 20 years at least. You know what I mean? We are seeing people working longer as well. You know, so there's still plenty of time to be putting it away. But the big thing is, the best time for you to start your pension was yesterday. The second best time is today. You know, and it's kind of, just get it done. Like, by leaving it on the long finger, the situation's not going to get any better. You know, but you can get yourself a little bit there towards it.
Are we? This is your crystal ball. Is the statutory pension going to go in the next 20 or 30 years? Is that what auto enrolment is? Is this what? Don't want to put panic stations out there. Is this what their goal is?
It could be. Like, I look at it like I'm 38 years of age, right? At the minute, there's about 4 people working for every one person retired. Because family sizes are smaller, when I get to retirement stage, there's going to be about 2 people working for every person retired. So something's going to have to change, you know? And that's why they were pushing the age up. People are living longer. Like, the state pension was never made for someone to live on it for 30 years. You know? Like, look, like all things, probably come to an end at some stage. Anyone who knows the answer to that now is looking into a crystal ball. That's what it is. Because you have to bear in mind as well that no government wants to be the one to let down the pensioners.
Oh, absolutely.
Because they vote.
Yeah, and just on that then, because we can't look into the crystal ball, do you think from your own observation and a person that owns a business, the auto enrolment, do you think that's been a good thing? Or not? I don't want to put you on the spot, but is it welcoming?
Well, look,
or is there more pressure on smaller businesses?
Well, what it is, right? It's quite a blunt instrument, and it needs to be because it's such a wide range of people that have to go into it, right? But there's a lot of people in auto enrolment who probably shouldn't be in auto enrolment.
Okay.
Like if you have employees that, or if you're an employee yourself, there's a higher rate taxpayer. Auto enrolment isn't the best thing for you. Where it is great is if you're an industry that traditionally never gave a pension. Now you have one. Now look, from an employer point of view, it is tough. It's an extra bill that you didn't want to have. But look, it's here to stay at this stage. So it's about making the most of it.
Shane, we're going to hold it there for a second now. Without these amazing sponsors and advertisers on this show, we wouldn't have this podcast. So we'll just give it a second there. We'll let Ash and the crew off there with the sponsors. This season of Carlow Connects is brought to you by 3 brilliant local Carlow businesses. Hickson Centra, Potato Market Carlow. Live every day at Hickson Centra with a fresh deli, a cosy seated area, free Wi-Fi, and don't forget to check out their brand new store on the Burn Road. Your local spot for great food and great service. Woods Contract Cleaners and Property Maintenance. Woods provides everything from office and window cleaning to industrial and commercial contract cleaning. And now they offer professional solar panel cleaning too. Find out more at woodscontractcleaners.ie. Green Pro Energy Consultants. Based here in Carlow, Green Pro Energy deliver BR certificates, air tightness testing, and ventilation validation with fast professional service. Get in touch at info@greenproenergy.ie, your local energy assessment experts. Okay, we're right back. Special thanks again to all the sponsors here of Carlow Connects. Right, Shane, so before we wrap up, and I have to do this is one of my favourite parts of the show. It's called Before There Were Bosses. So you're unemployable now, Shane, you know that? Yeah. Because everyone sitting across from me now is running a business, you're leading a team, making big decisions that you weren't always doing. But somewhere along the line, there was this first job, a mad story, a moment where you thought, what am I doing here? Shane, what did you do?
Yeah, I suppose I worked at a bit of everything, right? I said, like, financial services has been me since I got out of college. My first job ever was picking fruit in Townsend's fruit farm out in Tinryland, right?
How much was a punnet back then, Shane?
It was 15 cents a punnet. But,
you got more than I did, Shane.
Well, lads from the town weren't allowed to pick strawberries and I was there because they'd eat them all. So we were only allowed to pick raspberries and gooseberries and tayberries and everything like that. But I suppose, look, the first proper job where it wasn't, paid by the punnet was I worked in the Big Blue Barn in Carlow the day they opened.
Did you?
I worked there from 16 to 21 as a part-time job, yeah.
Bless you.
And anyway, I burnt the backside with more pairs of tracksuit bottoms on the slides before I stopped going down them.
And how long? You did for 5 years, did you?
5 years part-time, yeah.
Isn't it great? There's just so much, I just look now, there's so much opportunity for young people now in jobs and part-time jobs.
Do you know what? I still get people saying to me, sit down across me and go, you weren't in the Big Blue Barn, were you? And they're looking at it and go, yeah, I did something between coming down that red slide and telling you what to do with your €1 million pension pot, But I've worked in a lot of places. That's always where I'm recognised from is, did you work in the Big Blue Barn?
Big Blue Barn, yeah.
And the biggest problem is I'm seeing lads now whose birthday parties I used to host in the Big Blue Barn.
Their kids.
Yeah.
That's
when
brilliant.
They were kids.
And I tell you, I have such fond memories of strawberry picking. And like that, you'd be down the drill, Shane, and next minute this strawberry would burst you across the back of the head. I think we were getting 10p a punnet, and I think £1 for a bucket at the time, as far as I remember. And I can't remember the big names of the big strawberries, whoever they were. I used to always love picking them because I used to only take about 5 or 6 to fill a punnet, but the other ones then just took 20 or 25.
Well, I tell you now, with the fruit picking, my brother Ian, I'll give him a shout out with it. I'd say he was the only one ever fired from Townsend's fruit farm. You were only paid for the work you did. If you did nothing, you didn't get paid anything, and they still fired Ian twice.
Good on, Ian. And that's a wrap, folks, on this episode, Carlow Connects. Shane, if people are to look for you, where will we find you?
Yeah, so you'll get Slaney Financial Solutions at my website, sfs.ie, and all my contact details are there.
And if you're joining Carlow Connects, please share, folks, like it, send it to someone you know who's running a business, thinking about starting one, or just loves a good business story. And if you're a local business and you want to advertise on Carlow Connects, get in touch with us here at Amplify. We'd love to hear from you. Shannon and Ash will look after you. We'll be back again soon with another conversation, another story, and another connection in the Carlow business world. I'm Paddy Carroll, and thanks for listening. You've been listening to Carlow Connects. Keep up to date with the podcast by following us on all social media.